In the currency space, taking a look at the September Japanese yen futures contract, which is on a 4-day streak lower. Today we were only down about 1/3% at 73.55 going into the New York close versus yesterday's settlement of 73.77.5. But the yen is down another 1.5% over those 4 days versus the last time we had a positive close, which was on January 23rd. Now, in the last 17 weeks, and I'm including this week in that, which of course we have 2 days left still, the yen has only had 3 weeks of positive price action in those last 17 weeks. Again, this week can turn around. It just doesn't feel likely given the recent price action. Today we were down a little bit more than 0.5% at 73.39 on the lows. On the high side, up 0.4% at 74.07. Now, we did have some Japanese economic data. The Japanese retail sales was better than expected, but consumer confidence, like all the other countries lately, was down versus last month and less than expectations. Retail sales came in at up 3.6% versus expectations of 3.3%, and last month was revised better to 3.1%. This, of course, could reflect the tiny bit of inflation that Japan is actually experiencing for the first time in quite some time. But then you look at the consumer confidence figures for June, which came in at 32.1. That was lower than expected, and last month was 34.1, so it was also lower than last month. Most nations have been experiencing very weak consumer confidence. Now, Japan also has some bond problems. Obviously, in the 10-year JGB, the Japanese government bond, they're experiencing a struggle to keep that rate at their peg between 0 and 25 basis points, but also 1-year credit default swaps on Japanese 5-year bonds jumped 34% this month from just below 9 to just below 25.5. Now, that implies that investors are seeing problems in the Japanese bond market, and they're looking for insurance. That's what credit default swaps are. And the fact that those are increasing in price is not very good for the currency either.